Time now for an in-depth look at the market news on this Monday, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, good to have you back on.
Happy to be here.
Well, U.S. unemployment numbers for last month were better than expected, but there's a lot of uncertainty when it comes to the tensions with China and the new stimulus bill, so stocks last Friday were mixed. Korean stocks, though, strongly higher today. What's the story in the markets?
Okay, well, as you mentioned, the U.S. stocks were doing very well at the early part of last week, but for Dow and S&P, it plateaued on Friday, and NASDAQ dropped on Friday. And, well, the market was expecting the unemployment rate to be about 10.6%, but it actually beat the expectation, and the actual numbers were 10.2. So you'd imagine that the market would improve, but as I mentioned, it either plateaued or it dropped. And that's probably because the Congress could not agree on the stimulus package and extension of unemployment benefits. Now, President Trump, because the Congress could not agree, he did sign some executive order to provide some type of stimulus, but after looking at the executive orders that President Trump has signed, most analysts believe that it's not going to do much good. Part of what President Trump did was he delayed the payroll tax payment, but it's delayed. It's not forgiven, so most people will have to pay the tax anyway by the end of the year, and chances are the employers will withhold the payroll tax anyway, just in case they have to pay it, or if the President Trump's executive order is found to be not legal. And then President Trump also signed an executive order giving $400 additional payment to the unemployment, but he insisted that 25% of that should come from the state government, and because state government has already spent so much money, it's not quite sure whether they'll have enough budget, and it's also not clear whether President Trump has the constitutional right to do this, because budget is supposed to be formed by Congress. And then finally, even if President Trump can give the money, this money is going to come from the disaster fund for the FEMA, Federal Emergency Management Agency, and United States is also having a lot of natural disaster problems right now with the weather and so on. So it's not entirely clear whether President Trump's executive order will help the U.S. economy, and I think that's why the market has not been doing so well. In Europe, the market was better than expected because of the U.S. data. The Asian markets today were mixed. That's partially because of the rising U.S.-China tensions. President Trump's executive order cutting off TikTok and WeChat from doing business in America, as well as a threat of putting executive order that sanctions key Hong Kong government officials. So while China is rising today, Hong Kong is falling, and Japan, Nikkei, is falling as well. Kospi and Kosdaq, it's doing very well. Kospi has been rising continually since last week. It rose 1.48% today. Kosdaq, it has been continually been rising for two weeks, but there has been some changes in the composition. Individuals bought Kospi and Kosdaq today, while institutions and foreigners sold, which hasn't always been the case in the last couple of weeks. And the bull market is attributed to Trump's executive orders that I explained earlier that supposedly give aid to the unemployed in the United States. But if that really is the reason, then I question whether the Korean investors fully understand the President Trump's executive orders.
That's a great point. Well, here in Korea, speaking of budgets, the Korean government's already had three of them, three extra budgets this year, which is a record to deal with the coronavirus. Now, because of the floods, some are talking about a fourth one. That's something that hasn't happened in Korea since 1961. Do you think that's a real possibility?
I think it is a real possibility. If you look at how much the other countries spent, then actually Korea did not spend that much on supplementary budget. So far with the three supplementary budget, Korea spent about 59.2 trillion won. That's about 3% of GDP. Now, if you look at the United States, they spent about $6 trillion already, and they're thinking about another additional budget bill as well. And that's actually nearly 30% of GDP. Now, Statistica did a little analysis in June, so it's a slightly old statistic, and they exclude loan guarantees, but they calculated how much stimulus each country spent on coronavirus until June of this year. Japan actually spent more than 20% of their GDP as stimulus, United States 13.2%, EU 4.3%. Now, Korea, while the total package is more than 3% of GDP, because they're taking out loan guarantees, it turns out that Korea only spent about 1% range of GDP on coronavirus stimulus so far. So that means Korea, compared to the size of its economy, probably spent less than these countries. And then Korea is having record flooding problems. So it's not quite clear whether Korea has enough cash on hand to deal with not only the coronavirus and all its implications, but also the flooding problems. So there will probably be a supplementary budget, even though right now the Moon administration and the ruling party is saying that's not necessary. If worst comes to worst, they say that they can take money from next year's budget, but I don't think that is a very good practice. Rather than take the next year's budget, they're going to need the money next year. So if we need some additional money this year, we should budget additional money this year. And there is a cloud in the silver lining here. Repairing the flood damage is a legitimate use of government money. So it'll act not only to repair the damages, but also act as a macroeconomic stimulus and job creation so that it can partially combat the recession that came from the coronavirus.
Well, we're almost out of time, Professor, but it's the start of a new week. What's on your radar in the days ahead?
Okay, well, there's the government finance and budget trend data for August, and that should give the latest trend on the government budget deficit. July employment figures are also coming up for Korea, and that should always be interesting. And then another interesting statistics for Korea is the June money supply and liquidity figures, as well as July financial market trends. We've been talking a lot about real estate and housing in Korean economic news, and a lot of that is attributed to there being too much liquidity in the economy. And hopefully the BOK announcement will give some decent estimates on the actual liquidity numbers.
All right, we'll be speaking soon again about that, Professor. Thanks so much for coming on today.
Thank you.